So what is fundamental analysis? Well, when an investor goes to the share market to buy a particular share, he pays a certain price for that share, right? Now, have you ever wondered what are the factors which basically influence the price of the share in the share market? Well, broadly, the factors which influence the price of a share in the share market can be classified into three categories. They are sentiments. Sentiments affect the price of a share in the share market. So if the sentiment is optimistic, more likely there's going to be an appreciation of the prices of shares in the share market. The second is liquidity. I won't be going into the details of this because I'll be covering this in future lectures, but liquidity is an important factor which also drives the price or influences the price of shares in the share market. But above all, the most important factor which influences the price of a share in the share market is the fundamentals of the company. Okay? Now, fundamental analysis is nothing but a study of these fundamental factors which influence the price of a company. So, if you take any company and if you want to understand the principles, or if you want to understand or analyze the company and to try and come up with the intrinsic value of the company, fundamental analysis will try and look at this company from several perspectives. Fundamental analysis will try and understand the business model of the company. Fundamental analysis will also try and understand the industry in which the company is operating, the competition that the company faces, and how competitive it has to be to keep its position in the market. Fundamental analysis will also try and understand the management of the company and how efficient or how strategic the management is and how efficiently it can execute the plans that it sets for the company. Fundamental analysis will also try and look at the financial statements of the company and will see the profits the company is doing, the assets that the company has under itself. Finally, the fundamental analysis will also look at the economy and understand the economic circumstances within which the company is operating and what are the prospects of the company in the economy in which it is operating. But central to all these factors which fundamental analysis is trying to analyze is the value of the company. That is what fundamental analysis is trying to get at. That's what it's trying to figure. Now, what are the goals of fundamental analysis? Well, the goals of fundamental analysis are it wants to look at the revenue and the profits of the company. It wants to try and answer the question whether it can be able to maintain the revenues and the profits that the company is making at any point of time. Fundamental analysis also tries to answer questions like whether the company will be able to pay off its debt. Is there a chance that the company might fall into some difficulty in paying off to its lenders, and hence in the remote future might even have to sometimes declare bankruptcy? Is there any chance of the company doing that? Fundamental analysis also tries and looks into the management of the company and tries to give an assessment of what it thinks about the management structure and the management style. So these are basically the goals of fundamental analysis. But as I said, central to fundamental analysis is determining the value of the company based on these factors that you see. Now, equity research and fundamental analysis are two terms that are sometimes used interchangeably. They almost mean the same thing, but the only small technical difference that could be said exists between fundamental analysis and equity research is that equity research it drives investment decisions. So when somebody is doing equity research, he is doing it for investment decisions. He either wants to buy the company or sell the shares, buy the shares of the company or sell the shares of the company. How does one do it via the process of equity research? Well, one tries to find, using this fundamental analysis, the intrinsic or inherent value of the company, and then after it determines the inherent or intrinsic value of the company, it looks at the share price at in the share market. If the shares are trading below the intrinsic value of the company, that means the shares are undervalued. And that in that case, the investment decision would be to buy the shares of the company because the market is undervaluing the price of the shares. The analysis has determined that the price or the value of the company is higher, and in that case, the investor should go and buy the shares. In the opposite case, if the market, if the price of the share in the share market is higher than the intrinsic value that is determined by this process, in that case, the investor will see that the value of the shares in the share, that the price of the shares in the share market is overvalued, and in that case, he would go and sell the shares of the company. This is basically the basic, the crux of fundamental analysis. Okay.